You're listening to Beyond Insights, your go-to podcast for all things accounting, business, and technology.
From cybersecurity and AI innovations to sustainability and work-life balance, we've got you covered.
We host insightful guests from different backgrounds, industries, and locations all around the world.
From this diversity of thought, we aim to find solutions to some of our most pressing business problems.
Thank you for tuning in. Let's dive right in and go beyond insights.
Hello, welcome everybody. If this is your first time joining Beyond Insights, I'm Alex Hoffman, SIFT's Engagement Manager, and today we are joined by Jody Lee Manuel, who is our Head of Education and Implementation at SIFT. You've probably seen her face around if you've ever been on SIFT campus.
Or if you were in previous Beyond Insights episodes.
Yes, that too. And today we are talking about fraud. So, Jody Lee, can you maybe tell me a bit about why it's you I'm talking to about fraud, what some of your experiences are? I know you used to work in audit.
Exactly. So, before I joined SIFT, I was an auditor at PwC. So I did articles for 3 years, and then I was an audit manager for about 4 years. And as an auditor, your main job is not to find fraud, but part of what you're tasked to do is to go and do procedures to kind of understand their controls and to identify if there has been any fraud. And so, I do have a lot of experience working with companies. But another thing that I do that I think is quite relevant to this topic is for the last 3 years, I've actually lectured at WITS, and I've lectured the auditing class and specifically on a topic called general controls. But why this is relevant to this is it's all about kind of showing those students why it's so important what we learn in auditing. And kind of the way I explain it is I tell them that businesses are constantly under attack. And they're under attack from two areas. So if you think that you have a house and there's two people that are very sinister that are trying to mess up your house. The one is trying to leave dirty dishes everywhere, and the other one is trying to steal stuff, right? And so as a person, you're going to go do things about that, right? And it's the same with businesses. They're constantly under attack by error, which is kind of messy financial information, which doesn't sound dangerous. But if you think about it, if your information is incorrect, you're going to go make incorrect decisions. So we have Jay's Cupcake Company, and I always use the example. If you think, if you look at the data and it says, cupcakes are your best product, you're going to go make tons of cupcakes. But if that data was wrong, then all of a sudden you're going to have lots of stale cupcakes. So error is a big thing that business needs to worry about. And then the other one, which obviously is the title because it's definitely the more catchy one, is fraud. And that's basically someone trying to steal your stuff. And so if what we do as auditors and what we learn in auditing as accountants is really all about how can you protect your business or your house from these two elements. And I hope that kind of inspires auditing students to realize that what they're learning is actually very valuable.
Yeah, I think definitely. Also, we often hear about fraud in the news when it's like a massive scandal and it's after all of the fraud has happened. But what you really teach the students is how to prevent that fraud from happening and how to kind of nip it in the bud.
Exactly.
And also from the perspective of smaller businesses, because if we think of all of the, the big scandals that make it to the news headlines, these are massive companies. If you have a small business, why should you be concerned?
So I think that's a very interesting thing, and maybe just to go back to my auditing experience there. So when I was as an auditor, I don't think it was just me, a lot of auditors I speak to, is we don't usually find the fraud. Sometimes we all have one or two crazy stories of, I heard a story of someone who saw someone who had a flashy car and then they investigated further and they found that there was fraud. Or there are stories where you find it. But often, at least in my case, I was auditing very big, large listed companies. And so they can afford, so they have resources to focus on things like controls and good processes, but they also know that they're going to be audited, right?
Yes.
So they know that someone's going to come and check up on those things. Some of them are also just good, really honest people that care about it, but they kind of have those elements. And so often when we would get there, they would have already identified the fraud. Whereas I think with small businesses, for various different reasons, resources, they don't think they're at risk, all those different types of things, they don't actually spend time on it. And I think we did a course a while ago on fraud, and there was a study we found as part of our research, and it found that fraud usually lasts, 12 months, right? So that means if someone is stealing just, say, 1,000 Rand a month, that's 12,000 Rand before you even find out about it. And then the average loss is can't remember, but it was...
Yeah, I actually have some of these stats here. So exactly like you said, fraud often lasts a whole year before it's detected, resulting in a median loss of £117,000. And so the highest industries that were impacted the most by fraud were real estate, which was on average £435,000, wholesale trade, which was £400,000, transportation and warehousing, £250,000, construction, £203,000, and then utilities, £200,000. So
that's more money than I probably will ever see. And I think the thing is, again, small businesses often think, oh, we're not going to lose that much. But the thing is, if you're a small business, even if you lose a small amount of money, that's probably a huge portion of your overall revenue. And you probably also have less buffer. Like, you don't necessarily have all the cash reserves.
Yeah, you can't really afford to lose that kind of money.
So I think another reason why everyone needs to be worried about this and be thinking about it is okay, as we said, everyone's at risk, but also it's not complex things that cause fraud, and it's not necessarily complex things that prevent it. So another thing I touched on in my lecture, just try to drill it home with those students, is that the recent FTX scandal. So, when that kind of broke, I kind of went down a whole of YouTube videos watching all about it. It was super interesting. And there was this article that was written, and it was called Pay Attention in Accounting Class.
Yes.
I really liked this article. And basically what they found is that FTX didn't have like the most basic controls. And one of those controls, which I'm sure we'll discuss a bit later on, is segregation of duties. And if they'd had just segregation of duties, it wouldn't probably have stopped the fraud, but it would have maybe helped them identify it a lot quicker, and a lot less money would have been solved. So like the fact that such a big fraud could have been detected earlier by such a simple thing that every one of us could actually implement in our business means that, there's almost like no excuse for not, doing something about it and protecting your house, which is your business.
I think it's really about finding the things that will make it more difficult for fraud to take place, and also for errors, as you were saying, because those are equally threatening to your business.
Exactly. Yeah, and maybe on that, so as you said, you kind of split into those two different things. So whenever I think about it, as I've mentioned, if your house is messy, or I use an example of like litter in a park, right? So if there's litter in a park, you're going to do two things. Firstly, you're going to try and make sure that no one litters. So you're going to be, please don't litter. There's going to be a fine of like £1,000 if you litter, okay? So that's like preventing. And then you know that people are still not going to listen, and they're going to litter, and you don't want your park to look ugly. So what you're going to do is you're going to have someone walking around and saying, oh, there's litter, and picking it up and cleaning, and that's detective. So I kind of use that. And then if we think of the robbery example, I'm like, Alex, if I told you someone was going to come and rob you in your house, what would you do?
I think I would get an alarm system.
Cool.
I would maybe get some bars on my windows. I would get a gate or a fence.
Exactly. So it's exactly the same when you're a business owner. You're going to go get a security fence to prevent things from happening, and you're going to get an alarm to detect. So it's just thinking about your business like that. And that's basically what we deal with in auditing. We have preventative and detective controls or actions to really make sure that our business is safe.
And what are some of the key indicators of fraud?
So I think when it comes to indicators, I kind of will look at from an auditing perspective how we try and identify fraud, because I think what I've learned from my time in auditing and now dealing with small businesses at SIFT is a lot of what we learn as auditors is very valuable for business owners, because you can think the same way. So when we're trying to, assess the risk of fraud in a business, the first thing we look at is understanding the business and kind of the culture and the tone within the business. So a really common phrase is tone at the top.
Yes.
And if, the tone at the top, so like management and directors have this like no nonsense attitude, like we don't accept fraud. If there's an error, we need to fix it. Then that kind of like filters down, and I had a few different clients when I was in audit. And one example is there was kind of two key clients, and at the one, the kind of executive had this policy that like if we were to find even a small error, they must fix it. They want everything to be right. They don't want to kind of, let things balance off. Like if there's an error, it must be fixed. And then we had another client that was a little bit more like, let's see if the debits equal the credits, and like let's just see if, if it's small enough, then we don't have to deal with it. And both of those companies, they were relatively big and they all had levels of fraud in them because there's dishonest people everywhere. But I could really see the difference in, the one you could see like employees who tried to get away with things more often and there were more fraud instances. So I think tone at the top. And if you're a business owner, that's something that you can actually dictate.
Yes.
You can set that tone at the top and make sure that people know, listen, in this company, we do things by the book and we don't mess around and we've got processes and we take it seriously. I think the next thing is, as auditors, we'll do things like we call them unpredictability procedures. So we try to do things differently. And I think that principle is also relevant. If one person is responsible for doing one thing all the time and they never take leave, then they can kind of be covering up things, So making sure not one person is just responsible. So segregation of duties, those types of things. And then I think like the next two things we do is we go and understand the controls in the business. So we can discuss that a bit more afterwards, but make sure you have controls. And then we go do procedures, what's what we call them, to kind of test if there's been something wrong. And so I think as a business, you can do a level of review or analytics to go and understand and identify issues. So kind of that's the ways or things I would do to try and indicate if there's something going on in your business.
It's really preempting any areas where there could be the possibility for fraud to take place.
Exactly. Yep.
And so when you talk to students about fraud, what are some of the other things that you cover with them?
So I think we'll next go into kind of setting up controls. And so when you're learning auditing, often you kind of learn this perfect cycle of how your revenue should kind of work in a business. And then you learn all these controls. But they often kind of learn the theory and they forget where it all starts. And I think business owners maybe have a better understanding of that because it all starts with risk, right? Controls like segregation of duty or putting in passwords or all those different types of things, which are basically controls, they all cost money and take time, right? So you're only going to go do these things where there's risk. So we always have to start with risk. Like where is the risk that someone's going to litter in your property or someone's going to steal? So if we think of like a petty cash box, you're going to think, is there a risk of someone stealing money from my petty cash box, Now, if that petty cash box on average has R1 million inside, there's a very big risk that someone is going to steal it. And if it has 10 Rand inside, like there's maybe a lower risk or you don't really care. So risk is always where it starts. And then once you've identified all the risks in your business, then you need to go and identify, okay, what can I do about it? So for the petty cash, let's go and make sure there's a lock on it to prevent it. And then in case someone can break the lock, let's maybe go do a recon every single month to detect if something went wrong. So it's really like that flow. Let's identify the risks and then let's go and if the risk is high enough or we're worried about it enough, then we need to go do something about it.
And it can start, like you said, with this example, with simple things. It doesn't have to be some big fancy system that's super expensive and not really accessible to to small businesses, right?
Exactly. So we actually start with a lecture with a video of me walking through the SIFT offices. And basically what I do is I swipe my access card. And if there's a visitor, they have to register with someone at the office. And then we go show them that I need a password to sign into my laptop. I need a password to sign into my Gmail. And those are things that are available. It doesn't have some fancy software system necessarily. Those are things that are available. And even just choosing softwares that consider security and have controls, make sure that the softwares you use enable two-factor authentication, all those different types of things. So it's nothing super complex or super, creative that we kind of include.
And I think if any of you have watched our previous episode on cybersecurity, obviously that's another way that people can come into your business and try and steal your information. So very important to consider the financial risks, but also the technological risks.
Yeah, and I think that's also something why I'm so excited to do those lectures at Wits, so that SIFT can be involved, because the financial world and the technological world are one and the same, right? And I think that's often hard for students to understand because we do a lot of learning on paper.
Yes.
But as a business, if you're running your accounting practice in the cloud and your payment solution is on a payment point of service device, and your team's working on computers online, you're completely exposed, right?
Yes.
So you can't actually not think about all of those issues when it comes to cybersecurity. So I'm definitely not an expert in that. So Gareth is better placed to do that. I know
definitely, if you're interested in cybersecurity, do go check out that podcast that we had with Gareth.
Yeah, that one was a very, very interesting one. I enjoyed that one a lot.
And then I suppose in terms of putting some of these controls in place, what are some of the common things that you would recommend people do? I know the first thing that springs to mind for me is if you have a company credit card, like limit the access. Not all of your employees should know the PIN. Not all of them should be using it, because that's a very easy way where they could say, oh, just put it on the company card.
And I think that like a lot of them, as you say, are like actually common sense principles that we apply in our own personal life. Don't share your PIN around it. And so I think if we start thinking with like, again, go back to the risks, I think cash is probably the highest risk. So anything that has to do with cash, so company credit cards, whoever's making payments, like a big one is if somebody is responsible for making payments, they shouldn't also be the one that like approves the list of payments, right? So someone will usually like approve the payments and then someone else will have to pay it. And when you make payments, there's usually like two signatories. So again, and that's basically segregation of duties. So yes. I think segregation of duties kind of pulls throughout all the different areas, making sure that, you're not one person can just control everything, because that causes lots of issues. So I think, cash would be a big focus because we don't want people to steal that. Control of bank accounts is a big one. But then I think even like, if you just kind of need to look at through your system. So, when I make sales, how do I make sure? You kind of need to think like a bit of a fraudster sometimes, right?
How would the fraudster think about how are they going to get to my money?
Exactly. So it's going to be like, okay, so what could go wrong with the sale? Well, maybe somebody could pretend that they made a sale and then they could just take the goods for themselves, right? So we would often do tests for that as auditors, and we'd go make sure, was there actual sale? Maybe the stuff gets sent to, the customer, and then it never actually makes it there because they stole the goods, or the other way around, right? Someone pays you, and we actually do a test for this as well in auditing. We'd make sure that the employees' bank accounts aren't the same as the supplier bank accounts, because sometimes what people can do is go change the bank accounts on the system, and then they just say, oh no, we needed more stationery, so I bought some more stationery from this supplier, but actually they just keep paying themselves. So when it comes to payments, there's a lot of, you have to think, what could go wrong, where's the risk, and then go and put in controls around that. So for example, usually when you have like, approved list of payments, suppliers or something, you need to make sure that you have controls over how that can be changed. So someone can't just go into the system and change the bank details. There needs to be a form, it needs to be reviewed, all that sorts of things. And I actually have an interesting story. So one of my clients, their payment clerk, I think, anyway, she was responsible for payroll. So person responsible for payroll got an email from one of the directors saying, please will you just update my bank details for my salary, because it's, I've changed bank accounts. And the payroll lady was like, okay, cool. And she was about to change it. And then I think she was like, oh, she wants to go ask, why did they change it? Does is this bank better? Pay a fee, something like that. Or she was busy walking past him and she thought, oh, let me just find out. So she asked him and he says, I never changed my bank account.
Oh.
And they went back and looked, and I mean, again, this comes to training, right? Which is another thing we can discuss.
Yes.
But when they looked at the email was a little bit off. There was a few things, but not very obvious. It wasn't bad spelling and everything. And so someone was trying to obviously get her to change the bank details to their own. And I mean, directors, can earn quite a lot of money. So you can imagine how much that company would have lost if they didn't have a good process. And so obviously they suggested that in future, you can't just be relying on a nosy payroll clerk wondering about the bank's benefits. You need to have a better process.
Yes, there needs to be a way to verify that it's actually you that sent the email and why you're changing banks.
Exactly, and that the details are correct. So just a small example of how you can quickly lose a lot of money. And I think back to that example of small business, a big business could probably survive that. But a small business, in 1 month, you lose your directors or key, salesperson's commission or something, morale, cash flow, all of that is a big issue. You need to protect against that.
Actually reminded me of a website scam that I saw this morning. So this is obviously more on a personal level, but it could, impact you as a business owner if you're buying things online. There's a shop called Poetry, and somebody had made a fake version of their website, and it came up as an Instagram ad, and it said 80% off. So of course, click on this link, have a look. And if you actually go onto their real site, you can see everything looks exactly the same, except that this other site had screenshotted all the images and changed the 20% mark to 80%, and they just had a .top in their URL. So they're slightly different, but you have to know to look for that. You have to know to be skeptical of the ads that you see, to not trust everything that you see.
Exactly. And then you will buy a beautiful poetry outfit, because I also love them, and then it never gets delivered and they take your money. And probably worse, because your credit card details.
Yes.
No, yeah, you definitely have
Just
to be
another thing to
careful.
worry about.
But I think, and I think we also talked about this before, and I'm sure they chatted about it in cybersecurity, but it's, you can have the best controls and the best processes, but at the end of the day, you need to make sure that your employees know what to do, because if they click on those links, or if they don't see all of those things, or they change the director's bank statement and bank details, then all of a sudden you've lost a ton of money. So that's a problem. And I think there's a lot of ways you can help automate that. Or so, for example, back in the day, you would manually input a bunch of data, right? But now with most software, we have controls in the fact that, if it's a value or a product, you have to have a drop down, and only certain people can go and add new things, and you can't put text and numbers. So there's a lot of controls in software that can already make it easier. So if you're not using software, go and use that.
Yeah, definitely step
manually writing or using Excel or something.
Also, from the point of view of error, again, you're way more likely to be making mistakes if you're inputting values manually than if it's being pulled through by like cloud accounting software.
And I think that also gets me thinking. So I've chatted a bit about controls, so preventative. But at the end of the day, there's only so much you can do to prevent, right? You can have the tallest wall in the world, but somebody will climb up it and get across, So that's where detection comes in. And I think we really, in a good place these days with, the new cloud systems and all of that, because we really can have more transparency. We don't have to wait till the end of the month to go and see what's happening in our financials. We can go and look on a daily basis and see what's been happening. We can use analytical tools to go and, identify issues. And that's literally what I used to do as an auditor. I'd come in only once a year and we'd do analytics and stuff to say, okay, why was the rent so much higher in this month? And then we go and investigate. But now as a business owner, you can do this regularly because we've got real-time data. And so that really can help you identify, why is my rent so much higher? I didn't expect it was this much higher. And I always use this example when we do projects and stuff as well. I'm rent was way high in the 1 month, and then they click on the transaction and they go and see that cash was paid to an employee to pay the rent, but we also paid the rent. Obviously, it's a silly example, but it just proves that, if you actually have some form of process of review and you actually go and understand your numbers, you can identify a lot of things yourself.
And I think also the other important thing there is that you are reviewing your data regularly. So you're not waiting until the end of the year when all of the errors have already happened, all of the fraud has taken place, and now you're just kind of responding to that.
No, and I think back in the day, when I learned accounting at university, and it wasn't that many years ago, reporting, there was kind of monthly reporting, but it was very limited. And your financial statements were annual financial statements. So kind of once a year, you would go and put all the stuff together. And that's because it was really time consuming. But today we don't have that. You can literally do a daily profit and loss, and maybe it's not going to be perfect because you haven't done closing journals or anything. But yeah, you really don't have an excuse to wait till the end. And I keep going back to my analogies, but there's no point having a silent alarm in your house that goes off when someone breaks in, and then at the end of the year you go and review all the times that your house is broken into, right? That doesn't make any sense. You have a very loud alarm that wakes up you and all the neighbors and triggers the security company to come right away and see what's happening, And it's the same with our business. We need to make sure that if we can't prevent everything, we have a detection system that responds quickly, you know? And maybe it can't be daily on every single thing, but at least monthly, go and kind of see what's happening in your data.
And then I think to take it back to also ensuring that your employees are well trained, one, in terms of being proactive and preventing fraud, but then also in being able to detect it and to review the numbers regularly.
And I think on that, it comes back to the tone at the top, right? Because I think again, in those 2 different companies I was talking about, if the business owner is like, oh, just leave it, we don't care, then employees aren't going to feel comfortable to bring things up. They're also the ones that are closest to the numbers. If you think of a business, the person who's in the warehouse knows what's happening in the warehouse best, and so if they see something that's not untoward, or, your accountant sees something, if they're able to actually bring it up and they feel comfortable to raise it, then you're going to detect things a lot quicker.
Definitely. Is there anything else that I have missed out on?
I think maybe just, you didn't miss out on anything. I just think maybe to re-emphasize how important it is. And I just think how simple it is to just start, right? I think what I encourage all business owners to do is to just go and take a moment. I know life is very busy, but I promise you it's worth the investment.
And definitely.
To just go and identify the risks, where is your business at risk? And then from that, go and see, what small thing can I do? And even if you can't address every risk, just start with the small ones and start putting those in place and building that culture of addressing things to protect your business, because you're putting all this effort into building this thing out. What can you do? And then if you can't put in great controls, at least make sure that you are doing some form of review of your numbers to be able to identify it. So yeah, I hope that is encouraging and you feel empowered to protect your business.
And I think on that note as well, on SIFT campus, Jodie Lee is an instructor in lots of our courses, and we have a lot of courses on fraud. We have our fraud deep dive, which really goes into everything that we've been talking about today. And we have a few other courses on SIFT's own anti-fraud or fraud detection tools. Mm-hmm. So if you are looking for a tool, not to say you have to use SIFT, but just as it's the first thing that comes to mind, there are tools out there that you can use to make fraud detection so much easier and to make sure that you're working with that real-time data.
Yeah, and if nothing else, just make sure that you're getting your reporting frequently, or your data frequently. So but go check out those courses. We have the whole scary FTX story in there, which is so interesting. But yeah, thank you so much for having me.
Yeah, thank you so much for joining the podcast today. Thank you to everyone who tuned in, and we will see you next week.
Thanks for tuning in to the Beyond Insights podcast. Please like and subscribe on whatever platform you're listening to right now.
And please share with any of your colleagues or friends or family members that you think might benefit from listening to this podcast.
That's all from us. Until next time, see you then.